Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss even more inflation, some bottomed out stocks, and even much more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, April the 13th. And I mean, you wanted your dip. You got your dip. We hit over 460, SPY's at 438. Are you even worried about, this has kind of been a constant theme. You've had your SPY calls. I know they're kind of far out. They finally kind of got in the green and you were looking for greener pastures. But this pullback seems like it's kind of gone a little bit further than you expected. I mean, did you expect further back than 440?
I saw the potential for 445. I didn't think 440 was out of the question. But with that, there's like a saying about people who try and time the market and exactly, where it's going and stuff. And so I'm not going to say no, but at the same time, we could pull back to 420. Like, there is room back to 420. That's what happens when we rip fucking 50 points or 8% in 7 days? Like, it was ridiculous. So I'm not going to say that there's not potential, but I'll probably have to roll the calls. Probably by the end of this week, I'll probably roll the calls out to end of summer, something like that, and see if maybe we can get green on those bad boys.
Dude, my man, always committed.
Committed to the bull, baby. Perma bull.
Yeah, it does seem like the point. And it's crazy. And honestly, seems like opportunity central. There's so many of these stocks. It just seems like the bounce didn't affect. Obviously, it affected a lot of them. And even the ones it didn't really affect, it still got a little bit of kick out of them. But you see some, it's like, hey, we went from $5 to $170 during this dip. And during the bump up, we only got back to around 2, even though we were only around 4 to 3% off of highs and SPY. And now we're dipping again. We're back to even 150. It seems like there are the stocks. If you've been keeping up a price action, it seems like if price action is what you're going for, there are some really good potentials here. I know we talk about EQuoS a lot. When I say we, I mean I, which is one of my favorites, just because it always ran with Bitcoin, EQoS. Whenever Bitcoin was it, after listening to the last episode, it's like, is Dan being promoted? But no, I'm not. I have some call options and I do have some equity in it.
There's a disclosure.
Yeah, there's my disclaimer right there. But no, it's not like I'm crazy down. I've actually made a lot of money off of it, just flipping it and stuff. But it's one of those ones that was $16, I think, or $18 when Bitcoin was 60K. Bitcoin's 40K and it's $1.70. And then the market bounced back. It goes back to 220. I start getting some sales in for a good 30%. And now it's back down to 160. I'm getting those ads in. Bitcoin's price isn't too drastically changed. It just seems like there are those opportunities. We also mentioned Fubo. I don't have any Fubo right now, but I mean, it's at $5.80. We saw it at $6 recently, and it went up to, what was it, $8 after we called it for like a nice little 30% run. Back where it started, and SPY's not even 10% for 440, 10% away from the bottom of what it was the first time when it hit 400.
Yeah. So I think there's two things to this. What we're seeing is, at least what I felt, is that we've seen a shift in the way that stocks are moving. Before, it was like the market was moving a lot intraday, but we really didn't know where it was going. Now it feels like the market's kind of stabilized out a little bit, and we've been inside this range. And honestly, this range could definitely continue. But the other thing that I'm noticing is that there's a lot more intraday ranges and a lot more intraday trend. So when a stock fails, so let's just say a stock has news, goes up and it fails, it's not being moved real quickly by a headline, which makes the day trading and even the swing trading, the day trading and the swing trading much safer. And so there's much more opportunities out there, and at least in my opinion, because it feels like you can trade them. You know what I mean?
Yeah.
Like it's not so much about like, oh, like I'm scared to have so much on the market because at any time a headline could come out and swing the market the other way, which is a really good thing in my opinion. So like even the past 2 days, I've been trading a lot more intraday because again, there's more trend intraday and it's allowing us to do that.
Yeah, no, it finally feels like we're back at that point where it's like you can add on these dips comfortably, knowing this downtrend isn't permanent. It felt like you weren't sure about what was happening, let's say a month and a half, 2 months ago, when we were at the same SPY price range doing the same thing. But now I feel, hey, we're at these prices. We saw these same prices when it was at 400.
Yeah.
Is that just the inner trader, like the experience talking, or is that like, do you see that as well? Because I'm the more experienced trader, and you need,
That's exactly it.
Right.
That's typically how these things go. But no, yeah, it's definitely more of like the touch and like, and see, that's the thing about most of this is that we can use data to justify and come back to the reasoning, but a lot of things come down to, really experience and seeing it time and time and time again, and then that kind of like touch and feel. So last few days, like I've been dabbling a lot more intraday, and it's like, okay, like things are starting to work a lot better than 6 or 7 weeks ago. 6 or 7. Fuck. Sorry, missed my nap time. What do you call it? Yeah, so we're seeing like this shift where intraday it's like, okay, these trends are much cleaner, especially on the small cap side. Like the small cap side, I mean, things are working out a lot. Like it's like before I felt like small caps were done by like 10:30 in the morning. Now, there's actually like intraday trend where you're seeing maybe like the first half of the day, everything with news pop, and then 75% of them are fading through the rest of the day. And then there's like a few like outliers, which is really cool. But the one thing I will say is that SPY has been still making pretty big intraday moves. And so what I'd like to see is actually volume to increase and less volatility intraday. So I want it to be more of like a trend days, but more of like, instead of like open up 1% up, go back to red, go up 0.5%, and then finish the day down 1%. Like I don't like those kind of days. There's too much whipsaw. I'd rather see something like open up 0.5%, test red, go finish the day up 0.7%. You know what I'm saying? So it's not necessarily like these massive moves, but those trend days are the ones where I personally feel like even if it's not like tons of opportunities, it's like you can size and you can have that patience with those trades.
Yeah, no, I just really like the feel of the market's coming back, where it's honestly like for the small caps, it's like they've been bottomed out so much that SPY's not exactly dominating everything. You'd see today SPY's down 2%, small caps, well, sucks for you guys, 8%. But back in the day, I mean, they were totally dissociated.
Yeah, exactly. And that was the thing, was that when they were totally dissociated, I mean, it felt like we were inside the wild, wild west, you know?
Yeah, and another fun thing, and this may just be what I'm feeling, what I'm doing, but just a little thing of what I'm doing right now is browsing a lot of these small caps that have options, a lot of option calls that have been beaten down so much. And you'll see some with the spreads of even a year out. Like I'm looking at one, and the ones for January 2023 for just like a 30% increase in price. The spread is like 60% bid, 95-cent ask. And I'll just put those in at 62, 65, whatever, good till close. And I've gotten some of those. And first thing I do whenever I finally get them, put them at the ask. I mean, it reminds me of those old days of getting those 3 a.m. Weeble sells and just getting 20%, 30% gains off nothing. I mean, these are, even if you're just buying 10 of them at the 80-cent contract, that's still $800, a little 20%, $160 start the day, you know? I'm not complaining. And it's like the risk there. And obviously I'm only playing them if I think, a year out from now, they should be a little up. I mean, the risk reward on some of these small caps is phenomenal. And obviously, you just go back to last episode and you hear someone saying a small cap, you and 2 other people working, but price action's a hell of a thing, man. And and I hope I don't get just blindsided by delicious looking price action and risk reward, but it just seems like for the first time in a while, and by a while, I don't mean more than like 6 months or whatever, but there's some tasty looking things on the table.
Yeah. So as we get into the middle of the episode, I think it'd be good to talk about kind of the way that I've been handling, we have been handling shorting small caps, because there's been a lot of opportunities, especially this week. A lot of the biotech companies inside the small caps have been seeing a nice push to the upside. Now, maybe of the 50 plays that I've seen run, there's been a few outliers that have gone absolutely berserk. VERU being the first one that comes to mind. I mean, that thing went from 4 to 15. That's a potential. There's potential there for like life-changing money, especially because the last few weeks haven't exactly been, like super hot. So that could be one where it could have made your quarter. And obviously, like, you're not gonna hold it all the way through there, but still potential life-changing money. Now, the one thing that I will say is that VERU was tough from the short side. I didn't even touch it on Monday, but I did touch it on Tuesday. And so VERU, to go into a little bit about like what happened here, was that obviously they had a huge short float percentage, but there was a few things going around that I thought was really interesting. And just a few notes was that I think it was Oppenheimer was the bank that covered their last offering. It was $100 million offering, and they did it at $15 a share. What do you think the stock reached? So knowing that I just told you that the offering last time was $15 a share, what do you think the stock hit? It was trading around $4 a share,
and the offering was at 15.
Mm-hmm.
That's weird, because usually you have an offering below the stock price.
Well, so this thing was trading. So here, let me back up for a second.
Just for a lot of new listeners, for the offerings, usually how they are is how the company gets money. Like for a perfect example, GameStop, let's say they knew they shouldn't have been trading at $500 a stock. They're going to say, fuck this. We're going to take an offering. We're going to take a good bit of this money and issue some more stock, whatever. So issuing an offering at a higher price, I feel like just we have never talked about this before. Why? So I think before going into offerings at a higher price, could you kind of go into why people do it, offerings in general and as a little quickie? And then, because even I myself have never really heard of someone calling an offering at a higher price. I know whenever like after an offering happens, you'd be like, oh, well, the offering was at 70 cents and it's at 58 cents right now. So this is risk rewards there.
So the first thing is that typically no small caps do any offerings higher. And to be clear, VERU didn't do an offering higher, but that was where the last offering was. And so this thing had hit 24.57 in 2020, and they had done an offering at $15 a share. On this run up over the last few days, the stock has basically gone from sub $4 to $15.35. I'm saying that it's a real coincidence that $15.35 is the top and the last offering was at 15. But to your point about
why are these companies doing offerings at, I guess.
Well, wait a minute. So
hit me up. Knowledge me.
So the thing is that all these banks typically do offerings based on different valuations and different valuations. So when you have, and like what they're willing to pay, it's like when it's like, for instance, like when you talk about like a Dutch tender, which if you guys have some time, look into Dutch tenders.
Wait, like that's when you get on Tinder and you set your location for other ones.
Yeah,
hey man, Dutch bitch is bad, bro.
So effectively, when if you're doing an offering priced higher, it's because the company typically wants you to know that it's basically to instill confidence inside the investors that like they're doing it for the right reasons. So the big one that I can think of is Tesla. Tesla did like $1 billion offering, but it was priced significantly higher than the actual stock. Now, but you'll never see it with small caps. So like LITX on Tuesday, that thing hit like 459, and by 2:30 or something, they had released an offering at $2 a share. So like that's wild. I mean, the thing almost went red on the day after having really good news. So typically you won't really see anything, but that is really important to note because a lot of companies got to raise during COVID because they were at inflated prices, volume was all over the place. So even if they did an offering, and because let's just say, okay, sorry, I'm not thinking of this correctly. If they did an offering and let's just say the stock was up 300%, well, because volume was all over the place and they only needed to raise a certain amount of money, typically the offerings were eaten up pretty quickly. So like that's why when we saw there was a time when people were literally going long on the offerings. I mean, that was like a real thing. Yeah, people were like, that was like a buy the dip moment.
That was my thing with GameStop and like AMC. I was like, it's so obvious. Like, why wouldn't they drop an offering? They could literally raise every employee in their company's minimum wage to $20 an hour and have fucking movie theater people in tuxedos, but and no one would have known because none of it was based off fundamentals. If there's ever a meme stock running again, they don't drop an offering. I don't get it.
No, exactly. And so that's the thing is, and especially the other thing is like we just talked about, is like the volume is so insane that it typically doesn't matter. And then you get like inexperienced shorts, which we'll go into the short strategy in a minute, but you get inexperienced shorts who just see the offering and they slam the bid into it. So you might see like a quick dip, but again, overall, if they're raising, let's just say $300 million and you're trading, 200, and let's just say you're trading 100 million shares. Well, when the stock price is at 30, it'll only take a few hours to eat through that offering. So if you short slam in there because it's an offering without like really looking at the setup, then that might actually be a potential catalyst, and it's a win-win for the company. So that's important to note. But as we enter the latter part of, or not the year, but just as we get into 2022, all these companies that raised during COVID are going to start to see, thinner wallets. Yeah, that's a good word. You're going to start to see companies not have as much cash on their balance sheet, and they're going to start, especially all these growth companies, are not going to have as much time left before they need to raise or actually create real profitable revenue, which is really important to note. So with that being said, one of the things that I've been doing recently as I'm trying to get back into more intraday market moves is shorting small caps. Now I get this question.
Hater. That boy a hater, could.
Now I get this question a lot. And I get this question a lot. And
Dude, man,
and a lot
Adam Hyman on your ass, bro. I'm getting the guy. For anyone that doesn't know Adam Hyman, go listen to the last episode, bro. Big bag Hyman, 1.25 million fine from the SEC. This dude's hitting, and now Hugh wants to short his shit. Yeah, we'll see what fucking dumpster your ass ends up in the bump fuck. So basically, and I know like not a lot of people like this, but I'll tell you, there's definitely a lot of opportunities out there, and especially this past week with the different bios running, a lot of them have faded off. And of course you get those few outlier moves, but that's why it's really important to kind of keep your risk pretty tight. So the way that I typically handle it is that I usually don't touch anything short side for the first half an hour. And that's just because I want to see what everything does. Because typically things do a few things off open. That was good. Things do a few things off open. Never mind. Anyway, they either flush, trap, and pop, which is where, I usually typically get myself into trouble. If I see something have a terrible, let's just say like a quick red candle. If I see something have a quick red candle, I usually want to slam into that thing, especially if it's up like 100%. I'm like, oh, this thing's going to the grave. I try and slam in there. And then that's typically where I get myself in trouble, because then it breaks over that pre-market high and it's off to the races. And then you're just seeing me and every other short schmuck covering into each other. So for that sake, I don't touch anything for the first 20 to 30 minutes. Now, the next thing, and we talked about this on the large cap episode, is that I wait for failed follow through. So one of the other things that I learned early on, and I lost a lot of money doing this, was that if something was up a lot, I would get into these situations where I would just be adding more to my short, 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 every single pop. And then when we would see something like VERU being the outlier, I would literally lose 3 months worth of gains. So now, instead what I do is that I wait till it's literally done. Like the play is fucked. Like there's no point of return. Like it would need news to it would need another round of news to pop back up. So I look for failed follow through. So typically what that looks like is boom, let's just say off open, hits new high a day, comes down, retest new high a day again, fails. Okay, so now that last spot that it was at support at, I want to see that now become resistance. So do I typically get the top of these stocks? No, not even remotely close. But do I usually pretty late to the party? Yes, 110%. But I'm okay with that, because the alternative for me is just getting in there near high a day and just adding and being super stressed out. With this method, I
feel a lot less stressed, which I like a lot. Like I can still take a nap, and then come on and do the podcast and not be like twitching my eyes out and shit like that, which I like. So again, is that similar to when you're playing like a large cap? Is that similar but different? Is that typically wait for the new high day, wait, and then draw your key supports, wait for that support level to fail. And then once it fails through that support level, wait for it to come back up and test it and fail again. And that's your entry. So it could be the difference of a large percentage. So let's just say something's up 60%. It could be that now it's only up 40% when you're getting your entry. And guess what? That's just something that you got to be okay with. The other thing that I like to do is that typically when things start to fail, for me at least, I've noticed that they create descending triangles on the 5-minute chart. And so that's typically where I'll start to, if I'm not using just like a regular key levels and it's kind of like, it's all over the place, I'll use descending triangle as my stop. And so on the 5-minute, if it closes above that trend line, then I'm out. And so what this does is that one, it ensures that if I was right on the play, I don't let it go all the way back to break even. And so typically, as it tests that trend line, it saves my profit a little bit. The other thing that does is that it gives me that confidence to hold short because I just see it failing all the way down. One that was good is that if you go back and look at Hoth, Hoth, what's that? Henderson, Olive, the Hickory.
Hoth IRA, bitch.
That one had a clear descending triangle after I want to say the 10 a.m. blow off. And so that's a really good one to look back at as well. And actually, I'll post my trades. I'll post my trades for the last 3 days after we're finished recording this. And so now I'm not saying jump in there and just start shorting the hell out of these things. But that's a strategy that I typically like to do. Again, something like LITX, which if you go back and look at my trade, I was waiting for I was using VWAP as my, towards the second part of the day, I was using the VWAP as my guideline. And basically I was just getting chopped up because I would be in a bunch of trades and I would forget about it and it'd come close to VWAP. I'd be like, I'm just going to sell this. And then I'd get back in because I knew they was going to fail and I knew that they had to raise. And so I was just getting chopped up left and right. And sometimes that just happens, but it's one of those things where I'm going to print it out and just keep it so that I remind myself to have that patience because I actually ended up missing out on a good $1.20 move on LITX just because I wasn't patient. And so that's the type of stuff where that's the difference between making my week in that alone would have been making an extra week target of mine, and just not being patient and actually giving back some of the day. So just to recap real quick is that this isn't something where I just want you to jump in, but start to get used to stuff. And the thing is that I've noticed that because if I ever flip short bias, it actually helped me become a better long bias trader as well, because I could think from it from both angles. And so I think that even if you are just a long bias and you never want to go short, I think that's totally okay. But I would learn what shorts look for, just so that you can sit there and maybe you identify one time where, hey, this looks like it's a potential short setup. Maybe I should be rethinking my long. And so that's typically how I've been playing things. There's been some really good plays out there. I mean, stuff that 3 stocks were up 100% on Monday, Tuesday, same thing. And so there's a lot of momentum out there and a lot of FOMO to be made from both long and short. And I think it's something, I hope it stays.
Yeah. You also wanted to talk a little bit about the most boring shit in the world, inflation, before we kind of dived in. Yeah.
Yeah. So we did have CPI.
CPI. What? Come on. Give me that acronym, baby.
Consumer Price Index.
Consumer pussy. Okay.
So we have CPI. And so, let me see. So I've talked about it a few times that I would want to see CPI lower. Now CPI was in fact higher, but it was much closer than it's much closer than what we think. And so I'm confident in saying that we probably don't see 10% on CPI. And as you know, everybody and their mother is saying, it kind of looks like inflation is peaking. And so I would love to see that next CPI being like much lower. Like if we saw like 6% CPI, oh, that would be sick. But we were at 8.5%, which is kind of scary because the one thing is that, you know, you're really not seeing like you're seeing the effects of inflation in like food stores, but also that has to do with obviously the food storage. But it's not like, you know, your bank account is making crazy money right now, you know? So it's like your money is literally worth 8.5% less over a year, but like your savings account hasn't gone up at all. You know what I mean? Like, so it kind of sucks, but let's see what happens. I'm happy with the inflation number. I don't think we reach 10 unless something crazy happens. And I would love to see next reading being, you know, maybe 7, sub 7, something like that.
So you're saying these, what do you think is the reason for the change?
The reason for the change, like why do I think it's going to change? Or sorry. Oh, well, because we're raising interest rates and we're doing things to lower inflation. Like the Fed is tightening. You know, we're effectively going to try and lower gas prices, which goes into it, and we're going to try and, you know, control this supply chain a little bit inside the food stores a little bit better. So you take, you know, raising rates. You take 15% ethanol instead of 10%, and you take, you know, trying to control the grocery shortage, and all of that kind of adds up to, you know, lower inflation. And now the one thing that you will see is that, unfortunately, typically with this is that lower house prices come, but obviously inside the same token, that means that, you know, with lower house prices obviously comes higher interest rates, which we're already seeing. And unfortunately, typically it's a higher unemployment rate, which we don't want to see. But it's one of those things where it's like, okay, you got to pick your poison.
Yeah. All right. Well, one last thing before we get into some more bottomed out stocks. I mentioned, did I already talk about my Twitter put going into the money on this episode, or did I talk about
No, we haven't.
Okay. So, the day after Elon Musk bought 10% stake in Twitter, we said that it ran up accordingly. I didn't say an exact strike price, but it doesn't fucking matter. I said I took April 14th Twitter puts. The price was around $52 to $55 at the time. I believe around 55, 56, because damn, that motherfucker was high. Because people flocked to Elon Musk, a car guy, a techno guy, a meme lord, a weed smoker. And they raised the price of Twitter damn near 25%. But my big brain didn't think that was very reasonable. It didn't make sense up here. I said things should go back to reality. What did I say?
Is that the fundamental investor in you?
I mean, you can go back and check the episode. I believe it was 153 or 154. Elon Musk Twitter takeover. In the first minute of recording, thou shalt not invest in stock that Elon Musk hath taken stock in. For thou foolish investor hath raised the price far too much. God striketh down the man foolish enough to believe an edit button will save this app with no monetization for its favorited blue check creator Dan Dubs. So I shorted it. I got puts on it. I said it is an April 14th strike. When we were recording this, it was April 12th. believe it was at $55 or $53, something like that. My strike price was 45.5 as we record this podcast today. It sits at 44.5. I sold it is at the strike price for 125% gains. Did it feel good? Yeah. Did it feel better boasting about it on the app that I bet against? Yeah. Oh, great. Yeah, I'd like you to go retweet that tweet right now so people know that I'll go against the grain. To those hating on me still for buying puts on Wish, fuck you. Because I lost more money on Wish than I gained off this put. So, it's just nice to see that I can just be giving out this much fucking free money. What do you think about my Twitter puts? Did you take any? And
I didn't.
Why not? Do you not believe in me?
No, I just forgot about it, brother. You're more of the investor than I am.
And this is
I'm
actually
gonna retweet it right now.
This is actually like the furthest out like stock. Puts I got. But another thing, there are two things I'm actually starting to get in on. So yesterday I bought some Amazon around 30.30, but I actually ended up selling it around 30.80 because of the fucking scalper piece of shit I am. But now it's around that 30.10 mark, and I'm starting to add a little bit. I'm not going crazy, but we do have a stock split coming, and we talked about how bullish we expected that to be. Are you adding any? I mean, we're at this part. The past 5 days, it's gone from 32.50 to 3,000. I mean, we break this 3,000 mark, we could see 3,800 or so. I mean, not 38, 2,800 or so. That's a big one, man.
Yeah. So overall in the market, and this includes Amazon, I'm going to wait to see how the market digests, CPI and what we basically just heard. And so I'm going to wait until probably beginning of next week. And then that's when I think we'll have more clear of a trend, similar to how the March Fed meeting went about a month ago. You know how we kind of got we kind of trended after that. That's kind of what I think will happen. But I want the market to first digest the news a little bit. And obviously, like after the Fed meeting, it didn't digest at all, and it was just one massive green candle. But after green candle after green candle after green candle. But with this, I think that the market's going to digest a little bit. So I'm just going to play it easy for the rest of the week. It's a short week. We got Good Friday, and then next week I'll be looking to see kind of where we're going. But that is on the high of the list for sure.
Can you hear me out here? I want you to rate my little ideas here. I'm scaling in to Amazon equity.
Yeah.
I have some calls that expire after the split that are a good bit out of the money. And I have some puts that happen before the split that are pretty cheap for right before the split, just in case, any time before it does.
How far out are your calls, like date?
Around a month after the split. So around late June, early July.
I probably would have chosen a little bit further out, but you and I always, you know what I mean? Like you and I always do that. So I like it. I like it a lot. It could definitely dip into it. Probably, I usually if I'm playing something like that, I would probably close out like a week and at least 2 weeks before, because you know how
dude, you know me, I'm a scale out. I'm always gonna scale out. Dude, and the thing is, it just feels good. Like yesterday, I started scaling into Amazon. And it went up $100 or like $80 a share. I was like, fuck it, dude. I'm going to sell some. And thank God, because it's back below where I bought today, man. It feels like I'm trading again. So, and one other stock that I wanted to mention just before we go is DATS. DATS, obviously, we know was talked around a lot. November, it was around $18, down to around $160.
I'm down 45%.
Yeah, and I'm not holding it right now. I lost on it the first time as well. But in 5 days, I mean, it's down from 230 to 165. You may think, oh, maybe this is just some FinTwip pump. But I mean, Barstool, every Barstool video you watch, it's on there. I mean, I'm thinking this has value.
I would double down here if you wanted. With you.
Literally on my phone right now doing that. I am adding some right now. And I think this is good risk reward down here. I'm not big on the app, as I'm not big on any penny stock. I'm not using fucking UAVs drones anywhere, but that's just something I see. So obviously, as always, not financial advisors, but I'm a little tipsy today, so I'm giving out some stocks. Hit them out. Yeah, man. You have anything else to say before we bid these fine people adieu? I feel like I've talked a lot this episode.
Nah, bro. This was fun.
All right, man. Well, I hope everyone has a great rest of the week. Let us know what you think, and tweet us out some love. Peace, love, Twitter. Bye.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.